Testing, testing. Now I know you lost me the last time I hit that button. Can you still hear me?
Yep, I can still hear you.
Okay, good. Good evening, everybody. My name is Devon Dames, and on this particular channel from our meetup segment, you will get an idea of, oh, I guess that's Warren now. Hold for me a second. Hey, we say Warren.
I don't know. It tells me dial the number, and then once it's back, it says to go back to the meeting.
All right.
When I press to go back to the meeting, it's not allowing.
What?
I'm not seeing where to go.
All right, not a problem. What I will do, I already just started to hit the record button, but what I will do, I'll put my microphone near the phone and record you.
Okay.
So I'll start over and introduce you, and then we can start recording that way.
All right, no problem.
All right. John, were you able to hear Warren just now?
I am, but it's garbling you a little bit with the feedback.
Let's see if something like this could work. Hopefully it won't gargle me too much. But nonetheless, I'll reintroduce myself and continue the recording on. Hi, my name is Devon Dames. Welcome to this meetup club where we want to initiate a collaboration between many individuals who are interested in investing from any aspect. At this particular juncture of things, based on the collaboration of everybody involved, we were triangulating a conversation surrounding fix and flips, but tonight we have a good friend of mine on and a partner in some of the deals that we're doing in terms of buying businesses. So the agenda for tonight is to bring Warren on to talk about buying a business with little or no cash, and John Lind, who is a house flipper and a retired officer and a private eye here in the Brevard County area, who also wants to share some of his experience with you in this arena. And he has flipped a couple of places here and has done well in the space. And over time, we have come to, I guess, almost as if we're getting to be very, very good friends in the space. So without further ado, Warren, I'll introduce you and you could continue on and we'll ask you questions on buying of a business. But Warren, the floor is yours. Welcome.
Good evening. Thank you, Devon. Good evening, everyone. Thanks for joining us, those who are on and those who will be listening sometime in the future. My name is Warren Thomas. I'm the founder of a company called Renewal International. We're based in the Atlanta, Georgia metro area. And as Devon mentioned, part of our focus is acquiring businesses and teaching individuals how to go about acquiring businesses, preferably with as little money out of your pocket. But we're looking at businesses for the most part that can replace your existing income, and in many cases can change the trajectory of not only your life, but your financial future. So I look forward to the conversation this evening with Devon and John, and I'll turn it back over to you, Devon.
Sure. As Warren had mentioned earlier, those are interesting strategies for a collaboration that can take you to a level of income repatriation for yourself that's sometimes not explored. And the reason why it's not explored is because sometimes it's very difficult to go in if you don't have the specialty or the knowledge for buying a business. But if you join a team that you can be an active member in buying a business, the cash flows from those businesses, especially once you can scale that business, can be astronomical. And as Warren and I are partnering in that space, we're finding out some things that are extraordinarily accessible to individuals, and to connect this idea with how we're connecting businesses with cash flows and scalability, we invite others to join us in that space if they're interested. Now, John and I was talking today about the whole cycle of things as well. And one of those things is, how do you, number one, get a business to scale? The only way you really can do that is to have tap into a capital resource. For us, that can be a couple of different things. Number one, we use AR funding as a metrics. We use private placement memorandums as a metrics. We use the fixed assets of a business as a metrics. We use the payroll as a metrics. And if done correctly, tie in all those things into a business, you now can have the reach and the availability of accessing markets that you would not have accessed before. The general idea is that if you can buy a team, bring capital to the market and scale that team, you wouldn't have to put one foot in the door of that business once you've acquired it. So what I'd like to do at this particular time, Warren, I know we're going through an acquisition at this time. Why not you share what that story is like in terms of what the process is? How did you ever got involved with buying businesses in the first place? But how did you get involved in buying that one in the medical space? And how easy or how difficult that was for you to wrap your head around in terms of buying that business?
Okay, well, I'll give you guys the kind of Reader's Digest version of this process. This process has actually taken at least a couple of decades for me to refine, and I'll give you guys a little quick backstory. I've always been a real estate investor, and I think it was around 2000 I realized that I wanted to expand from real estate investing into acquiring businesses. The challenge with real estate, you have a lot of good structures that can help you tax-wise, cash flow-wise, and so forth. But for the most part, you're going to reach a cap in relationship to what you can generate revenue-wise and cash flow-wise. So by targeting certain types of businesses, there's almost unlimited growth, like you just mentioned. And come back over the years, I tried to acquire a small oil refinery in Kentucky. I tried to acquire a electronics manufacturer out of Oregon, and I even looked at acquiring a 2 or 3 funeral homes in that early period. And what actually was happening, I had to learn how to acquire businesses. I did not have the opportunity to be on Wall Street, or I did not work with any of the major M&A firms. For me, it was a matter of trial and error. And that's for me, the better way for me to learn as an individual is through trial and error. And with each deal that I approached, I learned a few different things. And for example, when I was working on acquiring the oil refinery, a small oil refinery in Kentucky, I realized I needed someone who can do the financial due diligence that I was not able to do, who can really dig into the numbers, project, identify what the weaknesses were with the businesses and so forth. So that was part of my understanding that I had to start building a team. Moving forward, after the market crashed between 2008, 2010, I lost a lot of real estate. And like a lot of other people, you know, you go through the challenges, and but at some point you have to realize, okay, what do I do next? And of course, I was a little shell shocked. I decided to go back towards the business acquisition route. Well, I've always known over the last 20 years that there would be a major transition, in particular dealing with the baby boomers, where many of them will be retiring or reaching retirement age. And going forward into the 2000s, the acceleration of retiring baby boomers will grow on a daily basis. And many of these baby boomers have businesses, from your small mom and pop situations to your large middle market opportunities. So with that, I said, well, let me look at what industries are going to create opportunities over the next few years. And at the time, there was a push for the Affordable Care Act, also known as Obamacare. And I realized at that time that insurance companies, in particular health insurance companies, will probably do well because they're the ones, in essence, were writing the legislation. So I started reaching out to brokers and started looking for health-related companies, in particular insurance companies. And I actually found an insurance company in Long Island, New York, and kind of worked out for me, even though I was based in Atlanta. I grew up in New York. And so I reached out to the brokers, and I was introduced to the owners of the business. But they were under the mindset that the Affordable Care Act would not go through, and they made no preparation for that business. So when I initially looked at that business, they were doing about $11 million a year, and they had about a $2.5 million net income. I thought it was a profitable business. I thought this was an opportunity. And right after the Affordable Care Act kicked in, when the marketplaces were set up across the various states in the country, their business basically went from $11 million down to about $1.5 million overnight. Why? Because they did not position themselves to be part of the marketplace that was structured in New York State. And a lot of their clients transitioned from their business into that marketplace for healthcare insurance. So we still considered the business, but we thought it might have been an opportunity to register with the New York State health insurance marketplace, but we decided to pass at the time, and that started my journey on looking at healthcare as an opportunity. And between 2013 to 2017, we kicked a lot of tires and went to the altar with a couple of businesses, but for whatever reason, it did not work out. So, you know, I always try to analyze, you know, what I'm doing to see where my mistakes are, where my faults are, where my weaknesses are. And I realized my approach had to be a little different. And in 2019, we organized a company called Integrated Health Services. And it was for the purpose of acquiring medical practices and developing a strategic plan around the medical practice. We had a lot of doctors that were looking to retire, if not immediately, over time. And in many cases, they were looking to scale out of their businesses. And you had situations where doctors and clinicians needed assistance in managing their businesses. They were good maybe at treating patients, but not necessarily at managing businesses. So with Integrated Health Services, we developed a focus around acquiring these medical practices, and if they needed management help, we'll bring in management. And if they needed assistance in eventually structuring a situation where they can retire, then we would work with them on that. And that's where we are right now. We identified a business where a physician had went through a major illness. It's a radiology business based in New York, 4 locations. And I started the process mid last year. And we were asked at the beginning of the year, because the physician was ill and subsequently passed away in the beginning of the new year. And we were asked to step in, not only to continue the process of the acquisition, but also manage the company while we were working on that process. And you being our CFO and a partner have made this process a lot more manageable. But that's how we got into the business. It's our Reader's Digest, my Reader's Digest version of how we came to where we're at. But at some point, we're going to do a more detailed history on how we came to where we're at right now.
Excellent. Excellent. So thank you so much for sharing that story, Warren. There are a number of paths that we have discussed on multiple occasions for access to capital as well as buying up a business. But I got a couple of questions for you, Warren. Number one, why is it so difficult to buy a business, period?
I think the first thing is lack of knowledge for a lot of folks. That's one. 2, access to capital. That's another major issue. And 3, a lot of folks don't understand that there are different ways to structure acquisitions. I would say that my history as a real estate investor enabled me to understand creative financing and structuring different kind of financial models that would assist in regards to acquiring a business. So going back to what I said initially, lack of information. Once you have access to good mentors, or if you're the type of person that you can seek out information through books and other resources, you can fill that deficit as relates to information. And the same thing with capital. Once you understand that there are a variety of capital sources out there, there's opportunities to raise capital. One of the things that you also have to have, you got to have a lot of balls. Acquiring a business is not for the lighthearted. It's a situation where that you've got to be willing to go out there and talk to owners, and you have to let that owner understand, yes, I know it's your baby. Yes, I know you've had this business 5, 10, 20 years, but if you're looking to retire or, move on to greener pastures, or you're looking for an exit into another business, you have to be confident within yourself that you can approach that seller or their brokers and let them know that you're the right person, providing that that's a business opportunity. So having the intestinal fortitude to do so. You also have to organize a team around you. As I said, for me, it's many years of trial and error, and I could have shortened it. But one of the things I had a challenge was developing the right team. You need a good CPA or accountant, a good relationship with business brokers. You need someone that can structure transactions that can be amenable for the seller, but also good for you and your investors. So having a good team in place is also very important. And then identifying the right industry. The thing about our group, our team that you're part of, Devon, is that we're agnostic to businesses. Our primary focus is the opportunity to scale a business, and most importantly, cash flow. We prefer businesses that have cash flow but we're not intimidated by businesses that we may have to turn around to get to the right cash flow. So those are some of the things that one would have to consider in entering this arena. But as you master those things, or you find people who've mastered them, it becomes a lot easier for you to acquire a business.
I'll ask one more question and then I'll open up the floor to everybody else. But my last question to you, Warren, is it easier, in your opinion, to start a business organically or to purchase a business that's already operating and probably need a turnaround or something along those lines? Which path is easier?
That's an excellent question, Devon. And I would say that both can be a struggle. It was interesting that you mentioned a startup. I was listening today about how Coinbase got started as a company. Coinbase being the largest broker or exchange for Bitcoin. And I was listening to the co-founder, I forget his name, on the process that he started and how in the Silicon Valley area he would have to go out and network and talk to people in relationship to becoming investors. And he said it frankly, he said, you got to be a little crazy. You got to be able to approach people and say, hey, this is my business idea, this is my business model, and I need money. And he said for every 10 people he spoke to, whether it's for raising capital or bringing in employees, it was a struggle. You also have some of the same challenges with buying companies. With buying companies, you want to find the right company. Are you looking for a company to replace your income? I call them job companies. Or are you looking for a company that is scalable, that it can actually build wealth? And you can grow the enterprise from maybe a few thousand, 100,000, couple $1 million into hundreds of millions of dollars and so forth. And that requires, again, certain traits from the individuals who are looking to do that. One, you have to be the type of person that's willing to go out there and talk to people. So you can't be afraid. Number two, you've got to organize a team to kind of fill those gaps that you may have shortfalls in. Three, you've got to be willing to sell yourself. Just like starting a business, organically, buying a business, people will invest and support you as an individual, sometimes before they even look at the financials of an existing business. But let's say you had a business that needed a turnaround. It's not making money, it's challenged. If you impress individuals, whether to come work for you and or to invest in you, and they believe in your vision, even if a company's not making money, you'll get the support. And we've experienced that tremendously. We have a business now that we're managing that we're literally turning around, and we anticipate in the next 8 months, it will be turned around. And so it's not an easy process on both sides. You have to be willing to dig in, commit, be persistent, and do what's necessary for either starting or buying. But I will say, I like buying businesses better because you can buy a business that already has cash flow, that's already making money, and in many cases, it's easier to finance when you can go to an institution like a bank, or now you have fintechs, and say, hey, I have a business that's cash flowing net 100K a month. I need to borrow $2 million. It becomes an easier sell than going to a group of investors and saying, hey, I have this idea and I think it'll work, but I need your money to test out the idea. So buying a business that's already cash flowing may be, in some cases, easier to sell to potential investors.
Well, Thank you so much for that, Warren. I'll open up the floor to anyone who would like to ask Mr. Warren Thomas a question on buying businesses or how to leverage some of the knowledge base that he's gathered over the last 10, 15 years.
Okay, guys, I decided to take this opportunity to come forward. My name is Kevin Robinson, and I live in Trinidad and Tobago. That's within the Lesser Antilles, within the Caribbean. And to be more precise, we sit just on top of South America. Right, so nice to meet you guys. This is my first, subscription to this movement. I was invited by Dr. Devon Dames, and he's someone who has always inspired me to pursue what I'm most passionate about. And while listening to you earlier, I'm hearing everything about buying a business, and it's everything that I'm currently going through in terms of getting an idea, having a startup, finding the right people to join you, and then taking it to the next level. You really touch on all the main points, but what I want to touch on is my own experience, right, that I'm going through right now, where I'm taking a quantum leap in my life, and I want to share my own experience to provide that unique form of inspiration. Is that fine to everyone listening?
Absolutely.
Okay. So with everything that you were saying, what stood out the most is having that team, having the right team around you, because let's say you're getting into an industry, most times your individual experience is not enough to convince an investor. Where let's say you started an idea, you have a business, and you are finding the right people to get on board, but then your position is, let's say, CEO, right? So you're the highest ranking member of that organization, and you would listen to all advice that is coming in, but then your final say is what would drive the directive. And what I've noticed is that if you don't have the right CFO, for instance, if you don't have the right chairman or the right COO, it's difficult for you to understand what you are getting into. Because as a CEO, you have that position as a CEO. It's a designated position within itself. And then you need to have people who are around you who specialize in these other positions that you don't have to worry about crossing your T's and dotting your I's in. And that you're relying on these individuals who you trust to cross the T's, dot the I's as you flow forward, especially within investigation of a new opportunity. So I was listening to you, and you really touch on some main points, but I think that some of your points need to be unpacked, because most people, they don't get the reality of a lot of the things that you were saying. So it sounds great. It sounds like you are explaining it exactly how it is, but then a lot of people, they need that breakdown to understand, okay, even though they see that 1,000 step ahead, they need to go back to that first step and then take that second step and that third step to really understand how to do this, so that once that learning curve has been decreased, they have that ability to move forward on their own, right? Without needing who was helping them at that foundational level, where they have built their own track record. So I think that fundamentally, it's about aspiring to create your own track record. That if you don't have a track record right now, you align yourself with individuals who have that track record. You already know what you want to get into, which industry. Like in this case, we're looking at real estate. So you want to get into real estate, you find the most reputable people possible that you as an individual could convince with your ability to concept sell, to get these individuals on board, right? And then how do you move forward? What are the stipulations? What are the implications? What are the next steps to get you forward? So, I don't have a question. It's just that I was really impressed by how you summarize everything. But I think that for everyone else on the call, it's important to break down the fundamentals of, who are you? What do you want? What is your vision? what type of people, what class or what caliber of people you want around you, and what quality of vision you have that you need these individuals to help you not just attain it, but then go through the steps necessary, go beyond these barriers, these hurdles that you would go through it within a financial institution. For example, like let's say you go to a financial institution, you need to have an opportunity where the cash flow covers debt service. But then what would you do if you have an opportunity where it's in high demand, so they're calling it maybe a bubble, and the acquisition itself, the acquisition candidate, they're within an industry that is in such high demand that the enterprise value is so high that the cash flow that business or most businesses within that industry, they are not covering debt service with a financial institution, And in that sense,
hey, come on, I think that's a great point. Why not let that be the question approach to Warren? And so we can give the others an opportunity as well to ask their questions. I know you're a little
agree.
more advanced than the rest, but Warren, let's look at it from this perspective. The company is in high demand, but they're not meeting the cash flow needs in order to cover debt. How do you address that?
I want to answer two ways. The first part of the statement, which was to unpack more detail for those who are listening. And he's absolutely right, but the shortness of the call and the meeting does not allow me to kind of go into detail. But we are working together, myself and Devon, to put together a more detailed program that will cover each individual area in relationship to acquiring a business, also doing compare and contrast with startups. That's
okay.
Two.
I mean, before you go on there, Warren, we could just simply say, keep on coming to our Sunday meetings at 7 p.m. Eastern Standard Time. And every week we'll go over a little bit or a part of it.
You're going to get a lot of information, and those of you who participate as members will share in a lot of opportunity. All right. The second part of that, well, not necessarily question, example. There are a couple of drivers that one can look at in relationship to a scenario like that. If you have a high demand industry, but the cash flow is not there to cover debt service, at situations like that, you may have to look for equity. You may not want to be burdened heavily with debt. That's why many startup situations, you're looking at bringing in more equity than debt, because the equity gives you the latitude to grow the business. So you may be in a situation where you may do a seed round, one A round, B round, as relates to growing the business and having enough resources to do so. The second thought is, if you are buying a business that's in a high growth industry but may not have the cash flow, again, it's the same kind of scenario. You may start looking for qualified investors who can come in as potential partners, or investors, limited partners, limited investors, and so forth, and help to support the business, so that way you're not taking on a lot of debt. What you want when you're looking at debt, whether it's business or personal, you always want to be in a position that you know you have the ability to debt service, to cover the debt. And if you have a situation where you have a growing business that does not necessarily have the cash flow, like a lot of startups, in that vein, what you want to do is bring in equity capital that does not have to be paid back immediately, or you're not on a monthly, semi-monthly, quarterly schedule in relationship to debt payments. That's how I would get around that type of situation.
Okay, well then I have a brief question. How would that apply to, let's say you have a business that's high demand, because this is what I'm going through right now that I am creating as I go along, but I want to know if this is industry standard, right? Where you have a business, it's high demand, you're getting it from a seller, right? Can that seller hold 40%, right, or less of that note that when you go to a financial institution, let's say they're holding 40% and you are funding 60%, where you are only able to fund or to sign up within that bank for 60% of the cash flow covering debt service. You know, in most cases, can that 60%, let's say the seller holds 40%, because when you go to a bank, they don't tell you exactly where the equity needs to come from. This is what I've noticed. So yes, you need to have equity. It could come from a private equity firm, but then, you know, they don't tell you specifically where that equity needs to come from. So let's say that equity comes from a seller and he's holding back, based on seller finance, he's holding back 40% of that note. And you are going to the bank to finance 60% of that note. In most cases, can that cash flow cover that service? Let's say the business is not horrible and it's generating some form of cash flow. Can 60% cover that service?
Well, without exact numbers, it would be hard to determine that. But what I will say, if you are giving a seller more than 60% of their asking price or whatever agreed on value that you guys come up with, I will ask that seller for 100% of revenue and cash flow. That way you're not sharing it with them. And again, subject to how you structure the deal, I may offer that seller what is called an earnout rather than have it as a note. Because when you go to a lender, they're going to say, well, what other additional debt are you carrying? If the seller's carrying an additional note, that may be too much compression on the revenue, on the cash flow for debt service. So what I would probably do is offer the seller what is called an earnout based on the growth and the earnings of the business and finance that 60%. But I would have control of 100% of revenue and cash flow. So that's how I would structure that.
Okay.
My deals, we're always asking sellers to carry a note. There's an old saying, closed mouth don't get fed. You got to ask them, hey, are you willing to hold 5%, 10%, 20%, even 40%? And in some cases, you may tell that seller that, can you carry a note for 50%? I'll give you 50% of your money and I'll pay you out of the cash flows that the company is generating.
I agree. But I also say that it's a unique situation based on a case-by-case basis. Because let's say that the owner is not that motivated, where they are willing to accept that you have 100%, but then they earn off of the earnings. I think that it's dependent on the motivation of that seller, where they're willing to adjust to that form, because that is a particular part within the negotiations where the seller doesn't have that say within the organization anymore. He doesn't have that voting rights or privileges within the organization, but he's relying only on the outcome. So it means he doesn't want to get involved, or he doesn't see the importance of getting involved in the process of acquiring that outcome. So I think that it's also based on a case-by-case basis.
Absolutely. You're 100% correct.
Are there any other questions from any of the other panelists on the panel?
I did have a question.
Okay, go ahead, John.
My question was about infrastructure. You mentioned that you might have to come in and manage the business, and I was just wondering, are you outsourcing parts of that? I mean, obviously you could hire a payroll company. Obviously you have to take advantage of what's in place. But for management, accounting, do you have partners? Do you have outsourcers, or do you have in-house people to staff that?
Combinations of both. For example, our relationship with Dr. Devon Dames is on one level as a partner. Devon brings many years of experience as a consultant, CPA, so forth. The other level is that He's also our CFO. So not only a partner, but he's also a CFO. So he's guiding, setting up all the infrastructure as relates to the finances of not only this company, but other companies that we have in the pipeline to acquire. We're also looking at marketing. Some of our marketing we're going to outsource in relationship to certain aspects of how we intend to grow the company. There are a lot of strategies that one can use in relationship to marketing that we may not be the best, but it's easier for us to outsource it to other qualified professionals and let them handle the marketing component. So subject to what you have internally, as relates to your team members, you may have to outsource certain aspects of the business. And as you grow, you may then eventually want to fold that component into the business so that way you have direct control of it. And in some cases, you may just leave it as an outside expense. Again, it's really dependent on, you know, what's going on with business, and as a team, what you guys identify would be the best way to manage that component or components of the business, whether internal or external.
Warren, one question related to John is that can you then also buy house flipping companies in this very same manner?
Absolutely. They're not only, but let me backtrack. On companies that flip houses, you usually tend to have one or two entrepreneurs that are running those types of businesses. And you're limited to the market that flipper is active in. You usually tend not to find folks who are flipping houses in multiple markets. They tend to dominate one or two particular areas, and most cases in the region that they're in. So it may be a city, it may be a town, or it may be a couple of cities that are have some level of east proximity to each other. You also have opportunities in contractors and construction. I've looked at contracting and construction companies that rehab for flippers and other investors and so forth. And some of those companies may be for sale. And but all one has to really do is the wonderful thing about the internet, the time we live in, just about any kind of resource or information you're looking for, you can just go online and search, and you can search for companies that are in the marketplace that buy and sell homes, and you can search for companies that are in the marketplace that rehab and are basically construction companies. You do have large companies who are mega flippers, like Open Door, and at one point Zillow now is out of the marketplace. They've liquidated a large portion of their portfolio that they were flipping, but those are special cases. Those are for the most part, Wall Street funded companies that have very large capital pools, and they buy very large swatches of single family homes, rehab them, and for the most part, they sell them off to other investors and so forth. So you do have larger mega companies like that, but for the average person that we're talking about on this call, the likelihood, the type of person you'll find at a flipping are, partners, husband and wives, or you may have an investor with a contractor. Those tend to be the models, and for the most part, their business tend to be a lot smaller, in most cases not as scalable.
Okay, could I ask another question if you get a chance? And that's capitalization of front end and back end on deals. A lot of companies you go into, take an investment company for an example, there might be fees or setups on the front end, but then they're pushing you into funds or placing you into funds on the back end that they're either commissioned through or receive money through. And many businesses synergize by having a front end deal with the customer and then a back end relationship with the service or product providers, so they profit in two places, front end and back end. Do you have back end profit centers with either payroll companies or other things that you set up where you get commission back end so that you make money on the front and back end outside of the investors?
Way to go, John.
That's a good question, John. One of the things we do, and I talk to Devon on a regular basis. I may talk to Devon maybe 3 or 4 times a day. Any deal we're looking at any opportunity for monetization, whether they're on the front end or on the back end. For the most part, we're going to hold on to the businesses that we acquire and grow them over time. There may be exits down the road that we can then utilize. One of the other avenues for back-end support and revenue generation we're talking about is creating a fund ourselves. Create a fund that helps not only on the front end, but also create a fund on the back end for support services. Back end in relationship to exits. So to answer your question, we're always looking at ways to monetize an opportunity, it really depends on the type of business. But just to reiterate, we're always looking at ways to monetize those kind of opportunities and so forth. And in some cases, it may even mean setting up an ancillary business to support some of the services that you're offering through your primary business. So you may say to another partner, all right, let's set up this marketing company because we need marketing services. And rather than outsource it to another stranger, you be the CEO of the marketing company, you hire the team of experts, and then you can then manage that particular company while we manage the primary company together. So again, now you monetize a service or a part of the business that that now creates another revenue stream for the partners and so forth. And then that particular ancillary business can now go forth and offer it not only to the primary business, but also to other businesses that may need the services.
Okay, yeah, I call it the Disney effect. Once they get you in the door, all the vendors are in their pocket. So it's kind of like, especially if you're managing or you're taking any kind of a control percentage, you can then direct to partners, friends, or people so that everybody wins in the deal.
Listen, when we all win together, and that's why partnerships are so important. As long as everybody understands what their roles are at the beginning, the only way companies grow in this society and in this world is through relationships. You have good relationships and partners, a rising tide lifts all boats. So I agree with you 100%, John.
Thank you.
Any other questions? All right, we're at the top of the hour now, which is at 8 o'clock. So what I'm going to do is close this program out. I know we wanted to get John's segment in, but John, can we do your segment next week?
Yeah, no rush. I mean,
Okay.
a lot of good conversation on today's, and I have a lot of interest in this area outside of real estate. So for me, I'm happy.
Yep. What I'll do either this week, I'll get you on the horn with Warren Thomas. And I think there's a lot of cross collaborations that can be done there, including joint ventures or what have you in that space as well. just based on what you and I talk about. I mean, it's interesting, but if we can cross collaborate some of these other deals, I think that would create a win-win for everybody on the ticket.
Yeah, I agree.
Yeah, yeah.
I'd like to learn more on the business acquisition side, especially because I think there's room for a win-win in so many vocations that I think there's a lot of opportunity for whatever you're doing, whether it's management, accounting, or connecting through it, or hard asset sale and resale. So.
Agreed. Hey, Kavon, you're gonna write me a check, okay? number, number one, you're going through that process right now, and I understand it. So Warren, he was asking questions that relate to him, like let's say last week Friday kind of thing. So,
Absolutely.
so
I definitely understand. And any help we can make available, let you know, and then we'll see what we can do on our side. All right.
Yeah, agreed.
And
Go ahead, Kavon.
yeah, I just want to say thanks for inviting me. I believe in your integrity, and I believe in your vision. And I know that even though we have a few people on the call right now, from the Caribbean, I'm willing to represent. I'm willing to recommend as much people as possible, knowing that the pandemic has caused so much turbulence, especially with employment of the average person. And I'm willing to bring as much people as possible, to learn first and then see how they can apply themselves properly to benefiting from an opportunity of this nature that you are presenting. I had to say that.
Yeah, I think in that arena, as you're saying, we know you're in the Caribbean, and you and I talk often enough as well too. But in the arena of wholesaling, and this is just a thought moving forward, if we can create a sales division right out of wholesaling out of the Caribbean, with us as the terminal buyer, guess what? That's a market within itself. You just match buyer and seller immediately. John and I are talking about something along those lines. Warren and I are talking along something along those lines in terms of bringing capital to a structure that can then be supported by a sales team anywhere in the world for farm areas all through the United States. So you don't really have to be here per se to take advantage of that. But yeah, it's, within this, how should I put it, this collaboration, there's going to be multiple levels of income streams as we connect and as our relationships gets better. We don't want to be a place whereby individuals are charged like $30,000-$40,000 to do a process. If you can find your own way within in navigating within the, in our puzzle box, then it's a lot easier for you to say, look, John is a specialist at that. Kavon is a specialist at that. Warren is a specialist at that. You now have a place that you can come where the entire team is ready and available. So once that can happen, along with the technology development that we can bring to the table, it's a no-brainer to have 50, 60, 100,000 people working for this company, doing deals all within the zip codes of the United States. Buying is not
I agree.
stop. So Warren, I'm going to leave the last word to you, and then we'll close out.
Well, again, thank you, Devon, for inviting me this evening. I look forward to coming again and sharing additional information, like everyone said, to unpack some of the ideas that I mentioned. And I just want to leave a note with everyone who'll be listening at a future time to this recording. One of the ways to become successful in business is to be in business. You start by starting. And whether it's to start a new business and or to purchase an existing business, you just got to get started. Gather the information, learn as much as you can, network with the team, plug into someone like Dr. Devon Daines, and join the network wherein that you will learn these processes, whether it's in real estate or business acquisition, and you will have a framework and a foundation to build on. On that note, thank you, gentlemen, and for having me on, and I look forward to participating again. Have a good evening. Bye-bye.
Good night.
It's everybody.